Welcome to the Deal Insider Capital Deal Showcase. Today we're sitting down with Ken Lineberger of Waters Edge Wineries. Ken, thank you for sitting down with us today.
All right, I'm glad to be here. Thanks, Maz.
Great. So could you provide us with a deeper insight into Waters Edge Wineries?
Yes, I'd be glad to. So Waters Edge Wineries is a very unique offering in the United States. We're the only winery franchise brand in the U.S. market, and what that means is we've disconnected the agriculture side of the traditional winery business with the winemaking side. So we actually can create urban and suburban wineries anywhere in the United States and not rely on local agriculture. So we're able to put wineries, for example, in Dallas or in Florida, anywhere, or in places that aren't traditionally known for having wineries because they simply can't grow great grapes to make the wine from. And we outsource the grape growing, the agriculture side of our business globally. So we're able to bring in quality, high quality product from places like Italy, France, New Zealand, Australia, even as far away as Armenia. And so we're able to produce the wine, however, locally. The easiest way to think about our model is the idea of a microbrewery, which we've all seen pop up everywhere across the United States over the past couple of decades. We're the same idea, except we're in a micro-winery environment. We're producing the wine in tanks at each one of our locations. And the locations are more upscale than most breweries are in. So we're in high-end retail class A type space where we can attract the affluent consumer. And that's the essence of our model, is bringing people into the wine business across the U.S. market.
Great. So what are some key challenges that you're currently facing in the business?
So one of our key challenges, and what we're hoping to resolve with this offering that we're putting out there, is limited capital. The business was started by myself and my wife. We founded the first location back in 2004, began franchising in 2012, and we're currently up to 15 units and hope to expand that to 50 units nationwide over the next 3 years. And that's somewhat of an aggressive place to start here at 15 and go into another 35. But the key to that is marketing. When we find the right person who is interested in our franchise and is able to have the capital themselves to be able to put together a location, they're just thrilled that we have this offering, again, because we're alone in this space. There's no one else doing this kind of an offering. And so what we need is a bigger megaphone to get the word out across the country for people that are interested in opening up a winery in places that you wouldn't normally consider opening a winery. So that's what we're trying to do is raise this capital so that we can get that bigger megaphone and begin marketing more aggressively and being able to grow more quickly.
You obviously mentioned the additional need for additional capital. What are the proceeds going to be utilized for?
Yeah, so that's all planned out. We have it down to a pretty micro level of how we're planning on investing the proceeds, but the high level is 40% of the proceeds will be used for additional marketing dollars, specifically in social media avenues. We have some specific companies that are lined up that do this for franchise brands and are able to attract people organically into interest in the brand, which is what we really want to try and do. Those are the most efficient leads usually because we don't have to pay any broker or any other entity in order to bring those leads into us. And then 40% will be used to improve operations. As a franchise business scales, it needs to provide more support, more material, more supplies in terms of the information that a franchise runs on into its franchisees to help them be more successful. Because the more successful the franchise system is, not only does it generate more royalties, which is what the franchise revenue model looks like, but it also drives their happiness and their desire to tell other people, yeah, this is a great system and you should join too. And then 20% of the proceeds will actually be used to increase the traffic at each one of our locations, which does two things. Again, it increases their strength of their model and their revenues, but it also starts producing more royalties for us because the sales will be increased at each one of the locations. So it's we still benefit even in the 20% that we're planning on spending as a direct benefit for our franchisees in the system. So that's where the money is expected to be spent, and that's estimated over a 2-year period. So if we raise the $500,000, it's not a single year plan, it's a multi-year plan as to how we intend to invest that money across the system.
Where do you project the company going in the next 3 to 5 years?
So our projection, as I mentioned earlier, is we need to be at 50 units or more. We certainly don't want to stop at 50, but the 50 units is the key target that we're after from 15 today.
Great. And can you tell us a little bit more about your professional background?
Yeah, sure. So, as I mentioned, I founded this company in 2004. For the past 20 plus years now, I've been at the helm of this, growing it, overseeing it, managing my team to help grow that. Prior to that, I was in the sales management role for a large public software company. The software focused on the call center space. It was a market leader in that space. And I managed the western half of the United States for this company, all of the sales teams and the technical sales teams. So I had quite a bit of experience. I did that for almost 20 years. So I had quite a bit of experience coming from a large company, understanding how they scale, how they grow, and what systems need to be put in place in order to support that scaling and that growth. And so I'm able to bring that over here into this role here as founder and president of Waters Edge Wineries.
What would be the exit strategy for the business?
So when we reach that 50 unit or better unit count, our EBITDA number should be between $500,000 and $1 million a year based upon the projections and what our current locations do in producing royalty revenue for us and our margins. If we can get it in that range and show the growth towards a $1 million EBITDA, then we become an attractive target to a larger umbrella franchise brand that owns multiple franchises under its umbrella. That probably would be in the food and beverage business as we are, and complementary to its overall portfolio of brands. And in doing that, we would estimate that a buyout would be an attractive offering for them and for us to create a liquidity event for all of our investors who've come along. And we're looking at anywhere, depending on the market at the time, between an 8 and a 15 PE type earnings in terms of what we would expect to receive for this valuation of the company at that point in time.
Mm-hmm. And what would you identify as the biggest differentiator in terms of your brand compared to everything else that's out there?
Yeah, as a market leader in this field, as I mentioned, there's no one else doing a winery franchise brand, and really hardly anyone else doing even what we're doing as independent operators out there. So we have a pretty wide lane, which is unusual in the franchise industry. Most franchises have two, three, four competitors offering very similar offerings, and we don't. And wine is something that is ubiquitous across this country. Most states, it's a high demand product. It's equal in beer to market size. So we're addressing this market. And here's the key is that in our research, we found that 6 states in this country have 80% of all of the wineries. 44 states have the other 20%. So there's an imbalance out there in the marketplace. And the simple fact of that is because you can't grow great grapes in places like Wisconsin or Michigan, or for that matter, most of the United States outside of those 6 states. So therefore, we're giving a pathway to be able to bring the winery experience to the rest of America, those other 44 states. So it's a wide open opportunity. So there really is no direct competition for what we're doing in terms of the specific offering as a winery.
And ultimately, why do you believe this represents a strong investment opportunity for any investor?
The biggest things I would point to in that is number one, our gross profit margin. Being in the franchise business, your top line revenue is driven by your royalties, which ours are 6% of the sales of each location. Our locations are pushing over $1 million a year. We're hoping to get some of the newest ones next year coming online, doing 2 to 3 million a year, which would be a great addition to our royalty revenue stream. And that all flows into 85% gross profit margins, which then drives an accelerating EBITDA because each incremental location that you add doesn't add a lot of hard costs. Over time, as I mentioned earlier, you do need to offer additional operational support, which means more headcount. But those are at specific times during the growth. They aren't each location. So you can grow this pretty fast and pretty far with very high margins, which is what investors like to see and ultimately what a buyer wants to see if we can create that liquidity event at the end of this road at the 3-year or 5-year mark, somewhere in that range.
Well, Ken, thank you for giving us a deeper understanding into Waters Edge Wineries. It seems like a real game changer in the space. Thanks again for your time.
Great. Thank you, Maz.